Well, inflation is running below our 2% target even now. Total inflation over the last 12 months was 0.7%. And we think that inflation is going to move lower before it moves higher for exactly the reasons you cited. Import prices have been falling in part because of the dollar, and oil prices, declining oil prices, have had a very major influence. Now, the committee has indicated that it expects that in its most recent statements. Now, we do think that the effects of these factors will be transitory, and especially with an improving labor market, that we expect inflation over the medium term, the next 2 or 3 years, to move up to our 2% target. We've said we're monitoring these inflation developments very carefully, and it is one of the key factors that will be driving our decisions about appropriate monetary policy. But we do think that these factors are transitory, and if we gain confidence that that's the case on the basis of incoming data and continue to see the labor market improve, we would consider still raising rates.